The momentum indicator, also known as the momentum oscillator indicator. It's one of those indicators that are available to traders to help gauge the momentum in the market. And it's not the only one that's out there. There's a lot out there. Well, several. And you can use it for intraday trading, swing trading, position trading. It doesn't really matter. Top three would be the MACD indicator, which is the moving average convergence divergence indicator. The RSI, which is the relative strength index. I don't know why they call it an index. It's an indicator. It's not really an index. And the stochastics oscillator. Now this is a blueprint that I put together a while back, and it highlights how to trade some of these popular indicators. It's totally free, and it's been an eye-opener for a lot of the traders who've taken advantage of it. The link is above, or it's below in the description. Now you can also use a series of moving averages like the 3 EMA setup that I've made a video about here. And you would look for the widening of the space between the averages. And that's going to indicate momentum changes. But I want you to keep in mind that there is no best indicator. There's not. They all measure the same thing, except they use different means of doing so. Now we're talking about momentum indicators here, obviously. And you want to use something that you're going to understand and it's going to fit your trading approach. So here, I'm going to discuss the aptly named momentum indicator. And that's in the family of trading indicators that we call oscillators. But first, I want to discuss why having momentum in the market is an important character that we want to see in any security that we're trading. Now, some are going to say that momentum precedes price, and that would make it a leading indicator. Well, the fact is that indicators need the price to calculate the output. So let's add some clarity to that statement. Momentum indicators, they're going to measure the amount the price of a security changes over time, the speed at which the price advances or declines. So a market where the price differential is changing with a larger price jump during the period on the indicator, we would consider that increasing momentum. So if the price is changing with smaller jumps, the momentum is declining. So if we just take the momentum indicator that we're going to talk about here as an example, the calculation is this. It's price today divided by price N periods ago times 100. All we're doing is comparing prices, generally the closing price, and we're looking for a percentage change in price. Nothing complicated about it and absolutely nothing magical about it. So you can have some rule of thumbs when you're using this indicator. And one is, if the momentum makes a new high, we expect to see a new high made in price. So we want to buy the next pullback. If a new low is made in the indicator, we expect to see lower prices, so we're going to short that next move that goes up. If a new price high is made, but lower momentum high is made, loss of momentum. And this is known as bearish divergence. We might see a stronger retracement in price. And traders who play breakouts from ranges, they might find great use in the momentum indicator to confirm the breakout. So if you're looking at an upside breakout from a range, and the indicator makes a new high as well, you may choose to buy the first pullback after the breakout. So in short, seeing momentum increase in a market is a sign that the current direction will continue after any corrective move. Not a guarantee, it's a sign. And understanding that is going to be vital for pullback traders who choose to include a momentum reading for any signal that they may trade. So how do you use it? Well, the first thing you've got to do, obviously, is put it on your platform. And any time frame, it doesn't really matter. And here, I've added the line version as well as the column version. And you can change that in the settings on some platforms. You decide which one to use, which one calls to your eye the best, because there's no best answer, regardless of what other people are saying. There's no best anything. And here, I've highlighted a few things that a trader would take note of and how to read the indicator. We have lower highs in price. Lower highs in momentum, that's a sign of continuation to the downside. Lower lows in price, but higher lows in momentum, a move higher may be a move that you can trade. And it does not automatically mean that the trend's going to change. This could be a short-term trade for you. Breakout of range, higher high in momentum, there's a greater probability of price moving away from the breakout location. And you should also note that the momentum indicator does not tell you trend direction. For that, you can use price action, price structure, or moving average to determine what state the market's in. In the simplest form, there is no crossover. There's no moving average crossover. It's unbounded, and that means that you just can't look at the indicator to see oversold conditions or overbought conditions. With any strategy using this form of analysis, you have to compare the actual price to the reading on the indicator. Look at the chart here in terms of price reaction and the momentum indicator. I want you to make notes of what you see. Okay, that's a lot better way of learning things as opposed to everything being explained to you. Find the relationships on these charts. So let's grab a strategy here. Well, one of the best uses for me for this indicator is using it as a prerequisite for trading pullbacks. Why? Well, one thing that you want to see when you're looking to trade a corrective move is the potential for the price to continue. Now, the indicator is going to assist you in locating momentum in the impulse price move, which your trading plans should require for pullback trading. So let's break down this chart here. Using the price action definition of an uptrend, higher highs, higher lows, price breaks this high, giving us a higher high, which means uptrend. The indicator makes a new high, as does price, so we trade the pullback for a long trade. We have another new price high, momentum indicator high, and this also sets up a buy signal, and we look for a pullback trade entry. Price here is ranging. Breakout occurs. The indicator does not make a new high, but the price does. But we're not going to look to trade the next pullback because the indicator did not put in a new momentum high. So can you see, are you starting to see how you can use it to design a trading strategy? I hope so. Let's take a look at another example. And we're just going to throw on a 20-period EMA. We'll use that for trend and a general location for the pullback to terminate. So here price is pulled back to the EMA and it's above and it's below the average. So we're going to consider this to be a range, and with the double top, we have a lower high in the indicator. You want to short using your sell signal entries, triggers, whatever they are. It could be a simple market entry when the price begins to drop from the high. We have a small pullback. This is a trade, as you can also see the declining momentum indicator along with price. We have lower lows in the price, lower lows in the indicator. So I want you to keep in mind the rule of alternation here, where the markets alternate with simple and complex pullbacks, right? One leg, two legged pullbacks. I want you to note the higher high in momentum, but not in price. Now, even though price is at the average, you would not take this trade because you're still expecting higher prices because of the high in the momentum indicator. But here price tops out, and while price makes a higher low, the low in the indicator at C is lined up with the low in the indicator at the higher low here. Short trade the breakdown. Complex pullbacks as the momentum indicator rises. Lower high in momentum while slightly higher high in price. Expect a breakdown in the overall direction of the moving average for trend. Lower lows in price while higher lows in momentum. We expect higher prices as divergence has occurred. So if you determine there's a trading opportunity for you, how are you going to enter your trade? Well, there are several methods and they're simple. And yeah, the trade entry is important, but more so is your risk and how you manage your trades. So the security here, it's showing a bullish divergence with lower prices, higher momentum reading. So assuming that you want to trade the move higher with the anticipation of a short-term trade, well, considering the downtrend in price, that's a smart play. Until you see the trend change in direction to the upside, you just consider it to be a short-term trade against the overall trend. Well, this is a reversal type of candlestick. You can set an order to buy the break of the highs at this price point here. Here we have a simple 5-period EMA. You could buy when the price closes above the average. It's just a trigger. This is a simple trend line, and once price breaks and closes it above it, with obvious bullish intentions, you can buy. Remember that a downtrend, what does it need? It needs lower lows and lower highs. Well, we put in a higher high at number 3, and you may consider this an obvious previous high. Buy the break. And this high may stand out to you more and would confirm to you a definite uptrend if it breaks. You can position just before the break of this high, that's price action dependent, or buy the break. Now here is a video I put together on trading breakouts and how you can use price action to position before the break. And that will allow you to ride the momentum for the quick gains that can come from those. Now, stops and targets. Honestly, I prefer to use the average true range to determine where I'm going to put my stop. And you can use any multiple of the ATR, but I prefer starting at 2 times ATR and adjust around price settings. And you could use below swing points for longs. You can use above swing highs for short trades. Some traders prefer to trail their stop loss location and even scale out partial positions at 1R, which is 1 times your risk. Look, let's be honest, we can never know in advance how far price is going to go in our favor or even against us. So reducing risk and taking profits in a structured and consistent way is something that is well advised. Can we use bullish and bearish divergence as a means of reducing risk or even exiting a trade? Sure you can. Imagine that you're short heading into the lows here. You could use that bullish divergence to exit the short position. All right, let's wrap this up here. Using the indicator as a means to qualify a price move, to make it a price move that you're interested in watching. I think it's a sound trading strategy. In pullback trading, we want to see an impulse move having momentum. And this oscillator indicator, I think it's good to point these moves out, as are most momentum indicators. So here's a rough trading system, strategy, whatever you want to call it. Just flesh it out for yourself here. Basically, you're going to look for the momentum indicator to make a new high in a trending market with price. Let the pullback begin, which is our corrective move. And let it terminate around a balance point. It could be the 20 EMA, the 50 EMA. There's no magic with moving averages, or just a previous support or resistance location. And use an entry such as price action, a trend line break, and use the ATR to set your stop loss. You want to trade breakouts? Look for a range to form with obvious support and resistance points. Look for that breakout to occur and ensure the momentum indicator has made either a new high or a new low, depending on the break. You can get on with momentum or wait for a little bit of a pause and then get inside the trade that way. Look, trading, it does not have to be complicated. A lot of people complicate it. If you look at range, if you look at a pullback, they're everyday market occurrences. And it makes them a great trading strategy to build around. If you add in the momentum indicator, it can help you set a rules-based approach to trading, which is really important. Thanks for watching. I hope you hit subscribe so you can know when we put out another video that can help your trading. And I hope you checked out some of these option videos that Mike has put out. They've been getting some solid feedback. Thanks for watching. Talk soon.